Hello friends, I am Nupur. Hope you all are doing great. We are connected through the channel Financial Literacy. Today I'll be starting with a very basic question of what is stock? When you buy a stock, you're actually buying an ownership stake in the company. The goal is to increase the value of your initial investment. Let's explore through an example. Awesome Company has a total of 10,000 shares outstanding. That's the number of pieces available. Those pieces are called shares. You decided you want to buy 100 of those shares. Let's assume you paid $10 a share. That means that your 100 shares cost you $1,000. Congrats! Now you're a part owner of Awesome Company. I'm sure the question must have arises, how do you make money? So, when you bought your 100 shares, the company was worth a total of $100,000. Let's pretend that Awesome Company had $10,000 a year in revenue when you bought the shares. Well, over the past year, Awesome Company has worked diligently to grow the business, and they now have 30,000 a year in revenue, and their stock prices climbs to $20, making your investment worth a total of $2,000. If the revenue of the Awesome Company tripled from 10,000 to 30,000, so how come the stock only doubled from $10 to $20? Although the values of the stock generally follow the overall direction of the company's revenue and the company's profitability. Actually, the shares of the company are freely traded on the stock market. So, ultimately, it will be based on how many people buy and how many people sell. If there are more buyers, then the prices goes up. And if there are more sellers, then the prices goes down. That's all the logic behind the stock. Thanks for watching. If you found this video informative, do like and share. Please don't forget to subscribe our channel.